Thursday, August 24th, 2017, Monaco 64, home of alternative economics and contrarian views. So I was thinking this morning of doing a market update and look at the charts, technical analysis. And then I started looking at Jackson Hole Symposium. Yellen and Draghi are supposed to speak. Well, they are speaking tomorrow. And I read a little bit up, about what people are expecting. And I said to myself, I need to talk about this. So before I talk about the central bankers at Jackson Hole, Wyoming, and the Kansas City, symposium there, Jackson Hole, I'm going to just cover the markets really quickly. From what I've seen, the technical picture for the dollar, precious metals, Japanese yen, stock market, we all seem to be in a holding pattern, and the technical picture looks interesting. For the dollar index, I still see downside. What we've seen in the last couple of weeks or so is a consolidation. We're not really seeing a trend. So the trend this year, of course, has been downwards for the dollar index. So we're seeing a little bit of upward consolidation. And that usually is a sign that, the market will go back down. Usually, that's what a flag formation indicates. Not 100%, of course. We could be bottoming, and then the dollar will go up. But to me, personally, having, been in the markets for over 20 years, done fundamental analysis as well and technical analysis, it looks like we're consolidating before going back down in the dollar index. Gold looks like for the last week or so, we're forming like a little pennant. The price ranges are getting narrower as days go by. And that's also usually a consolidation formation of an existing trend. The existing trend, since we traded down to 1205 in gold recently, has been up. So I expect gold also to resume its, path higher. When that will happen, I don't know. It could take a week or 2 weeks. Could be tomorrow. We never know. And what else? I looked at the stock market, S&P and the Dow, going back a year and a half. Looking at it right now, it looks like we've made a pretty big top, and you could argue, oh, it looks like, in 2007, just before we went down. But then you look back, in the last 18 months, we have seen those kind of moves, and every time it's rebounded. So that's where we are right now. So there isn't really much, direction at the moment. We seem to be in a holding pattern. Japanese yen looks, the dollar against the Japanese yen looks very much like we're a holding pattern as well. We have tested some really key supports on the downside in the dollar yen below 109, and I think 108.13 is the last important level. Dollar index, we're around 93. The key level there is just below 92, around 91.91. So that's what's going on technically. Right now, gold is at $12.86, down about almost $5. Silver, $16.90. Silver as well, we're just trading north or south of 17. Not really much direction at the moment. The Dow is up 21 this morning. S&P unchanged. The dollar is a little stronger against the yen, 109.32. Apart from that, it's all fairly quiet. And the reason why I want to talk about the Jackson Hole Symposium tomorrow, that happens every year, Kansas City Fed, they invite all the central bankers from around the world. Personally, of course, I think it's a waste of time and taxpayers' money, but these people are in charge, the central bankers, for now. But I was reading an interesting well, depends what you consider interesting, but I think it's interesting in that it just shows how morally corrupt and fraudulent central bankers are, and how Wall Street, City of London, mainstream economists, they all are part of this big lie. And what's the big lie? Well, it's the lie that we have a problem with inflation. But their problem is that inflation is too low, that it has to be above 2%. I could solve their problem overnight. If they went back to calculating inflation like they did back in 1990, John Williams at shadowstats.com, he gives all the details here. If we calculated CPI, which is basically supposed to be the cost of living, that's another problem. But if they calculated it back how they did in 1990, we'd be around 6% in terms of CPI. And right now we're below 2%. So this is what John Williams says, and I agree with him 100%. Alternate inflation charts. He says the CPI chart on the homepage reflects our estimate of inflation for today, as if it were calculated the same way it was in 1990. The CPI on the alternate data series tab here reflects the CPIs as if it were calculated using the methodologies in place in 1980. He does a 1980 calculation as well. In general terms, methodological shifts in government reporting have depressed reported inflation. Well, they call it inflation, yeah. Moving the concept of the CPI away from being a measure of cost of living needed to maintain a constant standard of living. So basically, if you go back, and I've done a video before, you go back to an old dictionary, like the Merriam-Webster dictionary from the 70s, which I have one. It says that inflation is the consequence of, it's the printing of money or creation of money and credit resulting in a rise in price. So it's not a rise in price, inflation. The rising prices are a consequence of inflation. So what the central banks and the governments and the economists, Wall Street, City of London, what they've done is they've changed the definition of inflation they've made inflation the consequence of inflation, which is prices as measured by the CPI or RPI as well, which they don't look at anymore here in the UK. So, and they've fudged the CPI, the measure. They, nowadays, as I said, and you look at shadow stats, if we measured CPI as we did back in 1990, it would be around just below, 6%. If we measured how it was in 1980, it would be almost 10%. So, and why are they doing this? The bankers and the governments? Well, because they want to pretend that there's nothing wrong, that they can keep artificial interest rates, not only short-term but longer-term interest rates low, in order to keep their big financialization, their big credit bubble going. They have to convince the investment public and the public at large that there is no inflation, even though there is. And they've even gone as far as discontinuing the publication of money supply data. In 2006, just before the crisis, they stopped publishing M3 money supply, the Federal Reserve. They said it was too expensive and it didn't matter. And just recently, I noticed that they started publishing M2. So is this a precursor to another crisis? Are they trying to hide something from the public and investors? Probably. But so this article on Bloomberg says, Yellen, Draghi head to Jackson Hole amid inflation unease. And you'd think that reading that, let's say you don't read Bloomberg because, you're not in, let's say you're an average person, you're working hard, you're not earning that much, and you're noticing prices going up, rents going up, everything going up, transportation costs going up, education costs going up, and you read this article, you read the headline, you think, wow, they're worried about higher prices, inflation. But then you read it, And it's actually saying that they're worried that inflation, or the way they measure prices, is too low. But why are they doing that? As I said, they need to keep doing that to perpetrate this fraud, so they can keep pumping the system with loads of funny money and stealing, real assets, stealing people's efforts, people's labor, people's capital through this fraud. And how do they steal it? Well, because the bankers and the people near the central bankers, at the top of the system, they get access and to this easy money, easy credit. They're able to exploit the system. They have the know-how, they can exploit the system. And the people at the bottom, they get screwed because they're not able to protect themselves, and the cost of living keeps going up. And you can't survive. It's getting to a point where people are not able to survive unless they can borrow, how they're doing here in the UK. And that's already starting to crack. We saw this week Provident Financial, a subprime lender to people at the lower end of the income spectrum, or unemployed people. Their stock price collapsed 70% the other day. So they can't keep this fraud going forever. And they're, intellectually, morally bankrupt, these central bankers, to come out and say that inflation is a problem. But not to the upside, to the downside, that there's not enough inflation, and that they're puzzled that we can't get inflation back up to 2% or above. Well, here in the UK, if you measure how they did in the mid-90s with the RPI, we were almost at 4%. And I'm sure it's a lot higher than that if you take previous measures. But the CPI already is over 2% here. But in the US, just because the Fed's favorite measure of inflation, which is the PCE, I think, is at 1.4%, they're puzzled. But they're doing this basically to keep interest rates low, so the banks can keep milking the system. You might think, well, banks prefer higher rates. Well, maybe, but they also like low rates because it means asset prices go up. And they're speculating in asset prices. They have access to cheap capital, and they can leverage their balance sheets and buy these assets and make capital gains and profits, not necessarily income. And governments, how do they benefit? Well, the big welfare, warfare, socialist, corporatist state can continue to gobble up people's, efforts, work and capital, and keep borrowing, even though the debt is insurmountable right now. 20 trillion in the US, government debt. They can keep it going because rates are so low, so they can keep rolling over this massive debt that will never be paid in the US, nor in the UK, nor in Italy, all the Western countries. So that's what's going on, and will it be interesting to listen to what Yellen and Draghi say tomorrow? Probably in the short term for the markets. Longer term, there's still it's still a fraud what they're talking about. And Bloomberg, the mainstream economists, the Wall Street and City of London analysts, they all play this game because they benefit from it. But now you can understand how we get the inequality we're getting, where the richer are getting richer, the very, very top fraction of 1% are doing really well, and the general public, pensioners, they're all being basically robbed. Very difficult to prove in a court of law that they're being robbed, but if you look at the system, they are. And it's all being done legally because people accept all of this, and that's why I'm trying to expose this. So Anyway, tomorrow, Yellen, if you are interested, she'll be speaking at 10 a.m. New York time, which is 3 p.m. London. That's Friday tomorrow. And then Draghi, the ECB president, will be speaking at, let's see, 5 hours later, so late in the day in London, about 3 p.m. New York time. There is some speculation that Draghi might, talk about, the QE policy of the ECB. So if you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. If you'd like to donate to the channel, there's some links below in the description. And I'll talk to you later. Bye.